topic, and probably one of the reasons why we could hope that something is moving within Europe regarding insolvency framework. Maybe first, saying that we have to understand the complexity of the non-performing loans issue in Europe. It's multifaceted. For sure, the financial crisis, slow recovery, have left many European countries with large stocks of NPLs in banks' balance sheets. The gross carrying amount in the EU in 2016 amounted to over 1 trillion euro. The average weighted ratio accounted to 5.5% on average, with, and that's very important, a significant dispersion across member states. For more than one-third of EU countries, the figure stands at more than 10%, with also differences in the nature of exposures, being real estate, corporates, large corporates, or SMEs. On the other hand, the non-performing loan ratio is not an issue in other countries. For example, France, it's not an issue, but it's a European issue, so that's why it matters a lot also to France. So in this respect, I think we have to insist on the importance of adopting a granular approach when addressing the NPL issue, because the resumption of non-performing loans tools reduction that are available, including legal tools, may differ depending on the nature of the exposure, especially. Why such high levels of non-performing loans? Because of various factors, for sure, that's a banality. First, economic drivers. Recession, as I said, weakening the servicing capacity of borrowers, the burst of real estate bubbles in some countries, and the slow recovery in others. Structural drivers, we do not have to forget, because of possible substandard loan origination in some countries or insufficient banking supervision that we need to address. And legal drivers, as the institutional and legal setting affects the ability of banks and investors active in the secondary market to operate, to work out non-performing loans. I mean that for sure the issue will be further developed in the roundtable following. So high levels of non-performing loans are surely a significant challenge for the European banking sector. And here again for a variety of reasons. Because it's persistent. So we have historically high levels, stable or further increasing 8 years since the financial crisis. Even if the situation has improved, for instance, in Ireland or Spain. It has become a European problem, not some member states' problem, but a European problem given the scale and the concentration of the problem of poor asset quality in the most vulnerable banking sectors, and also with a slow recovery which does not improve the servicing capacity of distressed borrowers. And because it leads to mutually reinforcing feedback loops between banking and macroeconomic aspects. And maybe to end, it bears also stigma effects for European banks as a whole. I don't know whether you are a shareholder of banks, but you may see that they are not performing very well. So, large stocks of non-performing loans matter for the health of the banking sector at micro and macro levels, and then the consequences for the financing of the real economy. High non-performing loans affect first the profitability of affected banks. Credit losses, provisions, administrative expenses. For sure that depends on the financial situation of the bank, but if the viability of the institution is at risk, or can be at risk, if capital buffers are thin and profitability prospects are low. Second, we do not have to forget this, capital is locked within banks when they are not able to treat non-performing loans. And so that hampers their ability to fund new lending projects. High non-performing loans may also translate into macro-prudential risks for financial stability if the most affected banks are faced with capital shortfalls, market pressure, or have difficulties to attract new capital. So that's on the financial side, but of course, there are also macroeconomic implications on the supply and on the demand of credit, or the effectiveness of the banking transmission channel of monetary policy. I'm sure that Banque de France and other national banks are very well aware of. So all these reasons, all this panorama that may sound a little bit dark, we have to solve the NPL problem. We have to solve it at a European level. It's a concern for all member states. It's in the interest of the European Union as a whole. What are the ways forward for addressing this issue? Clearly, and firstly, this is a matter for all stakeholders: banks, affected member states, European supervisors, and the European Union as a whole. Given the complexity of the problem that I tried to sketch very briefly, only a multifaceted approach with a policy mix of interrelated issues can rise to the challenge, and be sure it will take time. First, supervision is a key element. The single supervisory mechanism is currently consulting, as you know, on the guidance on non-performing loan management in banks, stressing the need to come up with strategies, non-performing loan reduction targets, or new internal organizations. This also relates to the restructuring of banks, as non-performing loan management may have transformative effect on the internal organizations, but possibly also lead, who knows, to mergers or consolidation in European banking sectors. For instance, the most affected small and medium banks may lack in the internal expertise to tackle issue, or you may also think that the fixed costs associated with non-performing loan management may be an unsustainable drag on their costs. If banks are to offload non-performing loans from their balance sheets, then we need liquid secondary markets for non-performing loan transactions, a mature servicing industry to help banks and investors, and fuel transparency on the situation within banks, the quality of the loan book with more disclosure. So that's a long list. This, of course, is useful for all member states, irrespective of the non-performing loan issue. We can see in a positive way that this can contribute to the capital markets union, I mean by developing such secondary markets. In some countries, in the wake of the financial crisis, state-sponsored asset management companies have been set up, for example, to contribute to kickstart the market. I'm thinking of Neymar in Ireland, Sarab in Spain, for instance. In this respect, insolvency reform is a key element, for sure, because investors need predictable frameworks to estimate the recovery value of the non-performing loans. So if you want to maximize the recovery value, then we need to improve the efficiency of these frameworks. From a legal perspective, we need some reform that enhance the enforcement of claims for creditors. In the end, for non-performing loans, we have some other various issues that I mentioned briefly: the resolution toolkit to manage non-performing loan, and for restructuring the loans in out-of-court and court settlements is very important in the context of insolvency proceedings. The frameworks for banks and non-banks actors to purchase non-performing loans on the market is also quite important, and to give predictability, as I mentioned. The foreclosure and a repossession process for collateral, if this is the option chosen by the owner of the claim, matters. The judicial and extrajudicial process, also including the length and cost of procedures, of course, is a key objective. I'm sure that you will be discussing this issue in detail during the roundtable and more generally during the afternoon. So, a brief sketch of this very important issue, 8 years after the financial crisis, of tackling the issue of non-performing loans. Again, if you have to remember one thing, it's a European problem that has to be solved at the European level. Maybe some words about insolvency law and what we hope a very promising upcoming proposal from the European Commission. I mean, it's really something that matters to finance ministers within Europe. For sure, it's something where ministers of justice are competent, but as you have noticed, within the framework of the Capital Market Union initiative, this topic has gained a lot of importance. It's just not about discussing the merits of law from a theoretical point of view. It's about addressing concretely very hot issues, non-performing loans, of course, for instance, and so to have an economic view on this. That's why, I mean, I'm very glad to be there, invited by Sophie that has done so much in France for trying to gather laws and economics. Maybe just to say the expectations and priorities for the French Treasury concerning the upcoming proposal from the Commission. We are saying that insolvency frameworks should be designed to maximize the efficiency, predictability, and effectiveness of insolvency procedures for the benefit, as I mentioned, of the wider economy. So it should make it possible, on the one hand, to save viable businesses, but it also should make it possible, on the other hand, to facilitate efficient liquidation of companies and their assets in case of no perspective of survival. It's, of course, something that is more complicated to say politically, but, I mean, both fit are important. So we would welcome proposals which aim at enabling good faith entrepreneurs to quickly benefit from second chances by implementing rules regarding the discharging of debt. Further, we believe that pre-insolvency proceedings which aim at achieving mutual agreements and at enabling companies in difficulty to restructure at an early stage without filing for formal insolvency proceedings, that these pre-insolvency proceedings are a must-have. Of course, they have to be well designed, but they are quite efficient when they are well designed, and the French experience shows that the rate of recovery is quite higher with such proceedings than within court proceedings. So, I mean, the proposal from the Commission on insolvency law should also open the doors for discussion about the rebalancing of responsibilities and rights among different players. That varies, of course, among member states. But we are not saying that France, in this regard, is a perfect example. Far from that. Of course, member states can have different backgrounds that are deeply rooted in their origins, but in the end, if we want to be effective, we really have to address that within a European framework, but at each member state level regarding where we stand nationally, to think about that. The responsibilities and rights among different players, that's for sure the key, and that's my practical experience in the restructuring unit mentioned by Sophie, to be able to find good agreements, not agreements that where you obtain the full agreement of everyone and that's working just for some weeks, and after that the company is still distressed, but to have a better understanding among all stakeholders to understand what is really necessary to obtain some viability, more long-term viability for the company. So in the end, if we are talking about this initiative within the Capital Market Union, we do not have to forget also to give such better transparency and clarity to investors. Because if we want first to have firm that succeeds, and maybe some of them that fails then after some years, so just to have some restructuring still to do, we need first capital to be put in European companies. And that's my conclusion. We need to be investor friendly, to adapt when it's needed, or framework, legal framework, in order to offer them, of course, a good return, but also clarity when things are not working that well. I thank you very much.